Welcome everybody to the March monthly update from Rosecut. Mike, thanks for joining us ever. How are you?
Thanks, Daniel. Yeah, good, thanks, yeah.
Good. So we thought we'd kick off by talking about our most fascinating of subjects, which is government bond yields, which is really actually quite important at present because of its knock-on effect on other asset classes. Mike, do you want to kick off by talking about what we've seen recently in the government bond market?
Yeah, I suppose. I mean, the way I would kind of introduce bond yields, which, as you say, are a very arcane and dull topic, even though they rule our lives. There was famously one of the advisors to Bill Clinton said that if he died and he was reincarnated, he'd come back as the bond market because he could scare people. So it's a very boring, dinosaur-like kind of phenomenon in markets. Also very, very scary when it comes alive, and that's what's happened in the last month or so. So at the end of February, bond yields in the States were about 1%, and then they kind of blew out to 1.6%. And those sound like small numbers, but for such an important part of the market architecture, that's a really big thing, and it changes the pricing of everything. It's made bank stocks more attractive, tech stocks less attractive because of the impact on valuation. And it's helped some of the things we've had in the portfolio as well, Daniel. And I guess it's sort of interrupted the broad rise in markets as well.
Yeah, it's really quite impressive to see how much effect it's had on the tech sector. Names like Tesla have really fallen quite a bit this year. And that's led to this trend of the Nasdaq actually underperforming the S&P 500, and the S&P 500 in turn underperforming other markets like the UK and emerging markets, which is also partly dollar linked as well. But as you say, for Rosecut portfolios, it's actually worked quite nicely.
Yeah.
Because for those people who've been listening to us for some time or invested with us, they will have seen that back in November, we rebalanced the portfolios to have more exposure to value stocks and the energy sector in particular. This was a sector that I know you were particularly keen on, and it's done really well. And that unfortunately might mean that for ESG investors, this is a year where you see a bit of relative underperformance. But for now, I think that for Rosecut portfolios are nicely positioned.
Yeah, it was a really good move actually. Yeah. And I think what the energy price, the oil price is telling us is that a recovery is now in play, and people are expecting a recovery. We're on the cusp now of a huge stimulus package being delivered in the States. Central banks are supportive. And if we go back to this time last year when the whole energy complex fell apart, we had a negative oil price at one stage. The rise in oil, I think, is a positive sign for the outlook. I think just to link that to bond yields, I mean, what's going to be interesting is that the narrative and the debate around inflation is going to be a lot more prominent. And that's interesting because we haven't seen, it's a bit like a sort of prodigal son, we haven't seen inflation in a very, very long time, and now it's coming back, albeit at very, very low levels. And that's probably the factor that really has upset bond markets. So I think for people who follow markets, for clients of Rosecut, the inflation debate is going to be something you'll hear more of. I think some of the trades we have on in the portfolios are actually quite good inflation hedges, the energy one being a good example. And that will really determine the level of bond yields and also the structure of the bond curve. So that's one of the things we're really focused on into the future.
Yeah, that's a good segue actually into what investors in the tech space might want to watch for when this relative underperformance ends. And that could be if the Fed, for example, decided to come in and do this idea called yield curve control, where they're essentially trying to cap bond yields from rising in step with inflation. Now that might be a time when we have to revisit our exposure, but for now they're holding flat.
Yeah.
And talking about tech, for those that have heard about Clubhouse but haven't yet used it, we had a go for the first time the other day, Mike. to have a chat about crypto and the world of wealth management. How did you find it?
I thought it was interesting, actually. These kind of, I suppose, how would you describe them? Curated chats between groups. I found it quite interesting. It's one of a whole range of new forms of social media and communication. And I think compared to other banks, it's good that Rosecut is delivering content and thought like this. So for people who missed it, we talked a lot about crypto and Bitcoin. You and I had a good debate on that. Quite interesting that through the recent volatility in equities, Bitcoin has actually been quite stable. You have better ideas than I do on why that is the case. And I'm divided as to whether Bitcoin is digital gold or digital copper. I think for me it's more digital copper. You think it's digital gold, but we leave it there. Yeah.
Yeah, I quite like either of them, to be honest. Given how many people don't like Bitcoin, just the idea of comparing it to something real sounds a positive. So yeah. But yeah, it was good to have a go on Clubhouse for the first time, and I guess we'll see if we want to try that again in the future. So yeah, we will let people know.
Good.
Mike, thanks for joining us.
Okay.
Good to
Always
chat.
a pleasure. Yeah.